I'm sure this December month, the target is filing of 9 and 9C. Though 9C is not mandatory, not signable, means we need not sign, but still there's a lot of inputs we have to give so that in future we need not get notices. So I welcome Speaker Abdul Samad for the meeting. I also welcome our learned advisor Ramdev ji. Thank you very much, Ramdev sir. Your presence makes a lot of strength to us. Welcome all GC members. I am able to see Ashish, Ajay, and of course our president. So welcome all. Friends, just to inform you that we have a lot of meetings in coming days. Importantly, please do remember that we're coming with members directory. So the team would be approaching you for information. So try to give the information by 31st December. We are aiming to release members directory with all the tax bar members. That is one important information I would like to inform all. Friends, and just to inform you that we have a lot of meetings in coming days. Importantly, please do remember that we're coming with members directory. So the team would be approaching you for information. So try to give the information by 31st December. We are aiming to release members directory with all the tax bar members. That is what is happening to inform all. Friends, just to inform you that we have a lot of meetings in coming days. Importantly, please do remember that we're coming with. There's some technical problem with Hitesh. Hitesh, you please unmute yourself. You're on mute. President, sir.
ஏன்னா எனக்கு வந்து நம்ம ஜிஎஸ்டில நாங்க போனோம்ல
President, sir.
இதை வச்சுட்டு தான் கேட்டான் இந்த மாதிரி போட்டுருக்காங்க அந்த மாதிரி போட்டுருக்காங்க இது தப்போ அது தப்பா இதுன்னா அப்ப
பாலசுப்ரமணியம் சார் மியூட் சார்
Hitesh.
அது வந்து வேற
Hitesh sir.
Yeah, it's okay now.
Yeah, audible sir.
Okay, because there's some resound again, replay of
Yes.
video.
Right sir, let me check.
Now
I
it
will
is
be
fine.
handling this. You carry on.
And also we have a lot of interactive sessions planned. One is on Vivad Se Vishwas and also amnesty scheme of GST. So coming days, so we have a lot of programs. So please wait and whenever the opportunity comes, join in good number and make the program successful. So with this, I welcome you all once again to this virtual speaker meet on 9 and 9C. So with this welcome note, I hand over to the President Hitesh for his opening remarks. Hitesh, over to you.
Yes sir. So warm good afternoon to everybody. I thank all of you for joining. I think there is some technical issue in the participants list. Let me check it and I'll do it accordingly. We are also live on YouTube now. So anybody who is not able to access, they can check on the tax bar YouTube live also. So regarding the today's program, so this is about GSTR-9 9C. And as you all know that this is the right time to go for 9 9C seminar because next 1 month we all will be busy in this. So about 9 9C, the importance of the forms is that because we have seen the assessments and the audits of the past few years with the department, how they have been trying to extract information or levy taxes, etc., based on the way you declare the information in GSTR-9 9C. So that is where it is very important. So without wasting much of time, I'll just let the speaker take over and continue the program because it's very exhaustive and just wasting time in introduction, etc. I understand, but as a association, we should encourage on the aspects of 9 9C. Then let us move forward. I hand over to Secretary sir. Thank you.
Thank you, President sir. May I request now Ajay to introduce today's speaker.
Yes, good afternoon all.
Good afternoon.
It's my privilege to introduce today's speaker, Mr. Shaikh Abdul Samad. Sir is a distinguished chartered accountant and a valued partner at Sanju Shah and Associates based in Chennai. He has extensive experience in indirect tax laws compliance dating back to the pre-GST regime. He has witnessed the evaluation of indirect tax laws and has successfully guided clients through various changes and reforms in the tax landscape. Sir, as a speaker, shares his knowledge at the workshops and training programs. He has handled training programs in the area of the indirect taxes for the officials of the Government of India, Central Excise Chennai Commissionerate, National Academy of Customs, Excise and Narcotics Chennai, the Commissionerate of GST and Excise Tiruchirappalli, Tirunelveli, Goa and Indore. Sir has also trained to the trade bodies, the professionals and students of ICAI, International VAT Association conference held in Denmark. Sir also contribute to the various publications on goods and service tax procedural matters for the GST and Indirect Tax Committee of ICAI. Thank you.
Thank you. Thank you very much, sir. Secretary, sir, shall I start?
Thank you, Ajay, for your nice introduction.
Thank you, sir.
Sir, with this brief introduction, I present all of you, CA Abdul Samad ji, sir. Now the floor is yours. Now, please take the session, sir.
Thank you, Secretary, sir. Thank you very much. And thank you, Ajay, sir, for the introduction. Friends, today we are going to speak about a form which we call annual return. And as per my parlance, this is the cornerstone of an annual compliance. So if we miss this compliance, then as the president has already highlighted, that the entire assessment audit is revolving around this annual return. So if you don't file your annual return properly, and if you don't have a proper data of the value which you are reporting in the annual return, you will not be in a position to appreciate any of the notices or even to appear before the tribunal or courts to get some relief. So with that introduction, let us start with what is annual return, what is the scope and introduction of annual return. So when we talk about scope, is this annual return compliance of all the returns which we have already filed for the year? By the word return, I mean GSTR 3B. GSTR 1 is not a return, it is only an outward statement. So is this a compliant? It's a compliance of all the returns which you have filed. So is it a collation of a data which you had already reported in form of GSTR 1 and GSTR 3B? Then the answer is no. It is not collation of data. Here, the board has categorically came up with the circular, a press release, where they have clarified that they are giving an opportunity to the registered person to make the correction of the errors, omission and commissioning which they have committed in their return, which they have filed in the past. That means for the year. So it is a unique opportunity which is given. It was not available in erstwhile law, in service tax and central excise, but it is available here. So there are three things which a person can do. First thing, if he has missed to report any supply, then he can pay that. He can report that transaction in his GSTR-9, pay the taxes using DRC-03. If he has missed to reverse any input tax credit which he should have done, then he can reverse that input tax credit. If he has claimed any wrong refund which he feels that that refund is not eligible to him, he can make the payment of that refund amount using DRC-03. So whenever I give this lecture, people normally come back and say that, sir, you have just making payments. What if what if I want to avail input tax credit? Can I claim that input tax credit?
One second. Sir, request everyone to unmute, please. Mute, please.
Hope I am not unmuted. Hitesh, can you tell me that you are able to hear me?
Yes, sir, I'm able to hear you.
Yeah.
Yes,
Thank
sir.
you. Yeah. So whenever I gave this lecture, people have come back and asked me only one question. You almost said that I can make the payment for each and every lapses which I have done. But what if I want to claim a credit, a fresh credit in Form GSTR-9? Then the answer is you cannot claim any credit in Form GSTR-9 because Section 16, subsection 2, clause number D has categorically stated that the credit can be claimed only when you file a form which is prescribed under Section 39, and that form is GSTR 3B. So you cannot claim any credit here, but you can pay the taxes along with interest so that you save penalty. Okay, so then there is another question. Is it prescribed in the law that to safeguard my penalty, I have to discharge now? The answer is yes. Section 1773 subsection 5 gives you that opportunity. So this is the opportunity which the government has given to a registered person to act on good faith, pay the taxes of the defects which he has done, or shortcomings which he wants to iron out during the process of complying and filing GSTR-9. Then to whom it is applicable? The GSTR-9 is applicable to every registered person except the registered person who has taken registration for input service distribution, a person who has taken registration for deducting TDS, TCS, casual registered person, non-resident taxable person. So there is an exclusion for this 4-5 categories. Otherwise, every person who has taken registration, every person who is filing GSTR 3B has to file GSTR 9. There is a proviso which says that the board can come up with the notification which can give exemption to a registered person who need not file the annual return. And for the year 23-24, board has come up with the notification number 14/2024, where they have categorically stated that if your turnover is less than 2 crores, then you are exempted to file Form GSTR-9. The turnover which I'm talking about is aggregate turnover. It is not GSTN turnover, which is state turnover. It is aggregate turnover, which means the turnover of all the GSTIN. So it is aggregate turnover is less than 2 crores, then you need not file Form GSTR-9. Besides, rule number 80, sub rule 3 had also prescribed a limit to file Form GSTR-9C. The limit is 5 crore, aggregate turnover of 5 crore. If your aggregate turnover is more than the limit, then you have to file 9 and 9C. So to summarize, if your turnover is up from 0 to 2 crore, it is exempted. You need not file. If it is between 2 crore to 5 crore, you have to file GSTR-9. And if it is above 5 crore, then you have to file GSTR-9 as well as 9C. Now, this section was amended, and this section has brought, there is a rewording of this section which says that every registered person shall furnish an annual return which may include a self-certified reconciliation statement reconciling the value of supplies declared in the return furnished for the financial year. Now, this rewording has given a scope for levying late fee. We have witnessed in the past that people have filed Form GSTR-9. They will not file GSTR-9C due to the reason best known to them. They will file GSTR-9. They will keep GSTR-9C pending. And the thinking was that late fee is not applicable because 9 is already filed. So late fee is not applicable now. Maximum, the penalty may come of 25,000 and 25,000. But after rewording this provision, which says that annual return may include a self-certified statement, which means your annual return is not complete if you don't file your GSTR-9C, if it is applicable to you. So if you don't file your GSTR-9C and you have filed only GSTR-9, the late fee will be levied up to the date you have filed your GSTR-9C. So this development has come after the financial year of 1920. So any return which is filed after 1920, if 9C is not filed, then the late fee is applicable up to the date of filing GSTR-9C also. Excuse me. Provided further that nothing contained in this section shall apply to any department or central government or state government or local authority whose books of accounts are subject to audit by CNAG or an auditor appointed by an auditing of accounts of local authority under any law. So it was already there in previous law. So this continue in the current law. Previously, it was there under section 35. Current law, it has been shifted to, after amendment, it has been brought to section 44 to give an exclusion to all government companies where they need not file GSTR-9 nor GSTR-9C. Previously, they were expected to file GSTR-9. Now, there is a clear exemption. They need not file 9 as well as 9C. GSTR-9 has to be filed annually. Okay. If any GSTR-9 is not filed after 3 years, they cannot file thereafter, after the completion of 3 years from the date of from the due date. There is a proviso which has added to the section which categorically gives the power to central government, who can come up with the notification and give an exemption to people who can file their return even after 3 years. So this is all about section 44. Now let us understand Form GSTR-9 with the content and what I should have to prepare this Form GSTR-9. So GSTR-9 have 6 parts. Part 1 is basic detail. Part 2 is detailed, where I have to declare or where I have to report my outward supply, inward supply made during the financial year. But initially, when they brought this form, the language was declared during the financial year. Declared during the financial year used to give an indication that whatever you have declared in GSTR-1 and 3B, only those transactions can be reported. But bringing an amendment to this clause made it very clear that their intention is not to make you declare whatever you have reported earlier. They want you to make an amendment or make the changes in the form, give the proper picture, what is taxable, what is non-taxable. You can do the changes, and that is why they have changed the word term declared from declared to made. Clause number 3, detail of ITC availed during the financial year. Previously, again, it was declared. Now it has been changed to availed during the financial year. Detail of tax paid as declared in the return. Here it has to be declared because It cannot be changed. It has declared during the financial year. Particulars of transaction of the financial year declared in the return of the next financial year till the specified period and others. So we will so in a nutshell, what are we going to report? In nutshell, I'm going to report about my outward supply, about my inward supply, which is subject to reverse charge mechanism. I'm going to report about the payout, what is my actual tax payable, my payout, and my input tax credit. So what is the expectation of by filing an annual return? The expectation of the board is to capture these transactions, outward transactions, RCM transaction, your payout transaction, means whether you paid the taxes in full or you have still to pay something, there is a balance payable, and input tax credit. Have you taken a proper and eligible input tax credit? So for next 2 hours, we'll be dealing in this. The question comes, how I'm supposed to report the transactions? How, from where the data has to be captured? As I told you, that filing annual return means giving an information to the board saying that, look, I'm ready for the audit. Look, I'm ready for the assessments. My books are available for assessment. My books are available for audit under Section 65. So in that, keeping that in mind, we have to ensure that the return which I am filing, annual return which I am filing, after filing this annual return, I will be in the position to give the data to the officer the next moment when I get the audit intimation letter under Section 65. So how the data is to be captured, from where the data has to be captured for filing GSTR-9. I will take you to Section 35, which speaks about accounts and other records in GST. As per Section 35, it's not a new section. It was there even in central excise regime. You are supposed to maintain RG1, RG23A in central excise regime. There were certain records which has to be maintained. Outward register, RG1, RG23A, RG23C, Part 1, Part 2. The similar provision is also available here, which mandates you to preserve certain records in every registered place of business. So every registered person, the term every registered person means every GSTIN. If Shaikh Abdul Samad A has 4 registration, say in Tamil Nadu, Andhra Pradesh, Karnataka, Kerala, then in each state, I might have prescribed one address as my principal place of business. And the law mandates that I have to maintain the transaction level details. Though financial statement is not, the financial statement is available for the entire 4 units, but law mandates me to maintain the transaction level details in form of outward register, in form of inward register, stock register, production register in the registered premises. Okay, so in my view, the GST is not a new law. As far as I'm concerned, GST is one form of central excise law. So in central excise, we had the concept of clearance. In GST, we have a concept of supply. In central excise, when I move the goods from my factory, okay, I was obligated to pay my central excise duty by issuing a duty invoice. So that duty invoice is not for a supply. It can be for a supply, or it can be for warehousing. It can be for the for various other purposes. Okay, so as soon as it is removed from the factory, the duty liability accrued. Similarly, here in GST, if there is a goods lying in my premises, if I'm moving that goods, it is treated as supply. So if I've taken an inward of a goods and it is there in my books as a purchase, and when I'm going to return to the supplier as a purchase return, it will be treated as your outward supply. Okay, so if it is treated as an outward supply, then you have to do a self-assessment with respect to the document to be issued, where it has to be reported. Okay, who is going to prepare e-way bill? Okay, so keeping that in mind, you have to decide whether the transaction will be treated as an outward supply, or it is an inward supply, reversal of inward supply. So all those transaction has to be captured in the outward register, inward register, stock register. And there is a section which categorically says that you have to maintain this, okay, in each and every premises. Like Shaikh Abdul Samad Ahmed has to maintain one in Tamil Nadu, has to maintain in Andhra Pradesh, has to maintain in Telangana, has to maintain in Kerala. If I have registration in these states, I have to maintain these transactions. Though my audited profit and loss account, audited balance sheet is one, but this reports has to be preserved in each and every GSTIN wise reports has to be preserved in the principal place of business, and this will be used for the purpose of filing your annual return. So what is the purpose of having this outward register, inward register, and stock register? Outward register helps me to classify the transaction. It helps me to classify whether the transaction is supply of goods or supply of service. It helps me to identify whether the transaction is composite supply or it is a mixed supply. It helps me to establish whether the transaction is exempted transaction or taxable transaction. If it is exempted transaction, it should be supported by a bill of supply. If it is a taxable transaction, then it should be supported by a tax invoice. I can do a classification with respect to whether it is B2B supply or B2C supply, whether it is B2C L supply or B2C S supply. It will help me to identify whether it is SEZ transaction with payment or without payment. It will help me to also identify whether it is export of goods or export of service. So if it is export of goods, 96A, rule number 96A, which categorically have given certain deadlines. So in case of export of goods, the goods should leave the premises, the goods should leave the country within the period of 3 months. In case of export of service, I should receive the foreign convertible currency within the period of 1 year. So to help or to identify whether there is a compliance or not, I have to preserve this outward register and look into it, whether the sections which are prescribed, the rule which is prescribed. For example, merchant exporter. Merchant exporter is one thing which many people have taken it very lightly. And recently we started receiving the notices from the assessment officer asking, you have done a transaction of 0.01%. Please prove the compliance of notification 40/2017 CT rate. Okay, and we have observed that people have given the invoice at 0.01% without vouching whether the supplier is a Star Export House, without vouching whether he is taking the goods directly to the port, without even seeing whether the goods which he has exported for the purpose of merchant export has left the country. Okay, and this transaction, to take the benefit of this transaction, the first and foremost thing is you have to intimate your jurisdictional officer that I am going to take this transaction, I'm going to supply to a merchant exporter, and after the completion of this merchant export, I will submit to you the bill of the shipping bill of the supplier, of the exporter, which will be having my invoice number, my GST number. So only when I give this data to the jurisdictional officer, I am eligible for 0.01%, which is exempted rate. Otherwise, I am subject to differential tax. There is a lapse from my side. I have to pay the tax along with interest and penalty. Okay, interest and penalty. Then, nature of supply, whether the transaction is interstate supply or intrastate supply. Okay, so this register will help me to prove that, okay, help me to establish that the transaction is interstate supply or intrastate supply. There can be an issue where the goods are supplied at X factory price. So when the goods are issued at X factory price, to say like I'm in Chennai, so I have a warehouse. I told my manager that you export or you just hand over the goods along with an invoice to a supplier who is going to come from Bombay. So he does that. So where is the transaction getting ended? The transaction gets ended in state of Tamil Nadu. So we don't know whether he has taken these goods to the state of Maharashtra or not. So in that case, I can only issue CGST as GST invoice, though he has given me a GST number which is for the state of Maharashtra. Okay. Point of supply for goods and for service, there are two different point of supply. For the goods, it is when the goods is removed from the premises, I have to prepare a tax invoice, and the good should be supported. It should be moved under the cover of the tax invoice. And if it is a service, then I have 30 days time to give the tax invoice. Okay. So in the present environment, in the present ecosystem of e-invoicing in the state of Tamil Nadu, I really appreciate the officers have started checking whether the supplier is obligated to give e-invoice, and if he is obligated to issue e-invoice and they have not issued e-invoice, remove the goods without an e-invoice. They have started giving the notices. In my view, that's correct. Legally, it is right, because if you read the rule, the rule categorically says that the goods has to be moved. The goods has to be moved under the cover of a tax invoice and e-invoice, e-way bill. So in case of e-invoicing, if the goods is moved under cover of a manual invoice, then it is not treated as if you have removed the goods under a proper invoice. So that means you have removed the goods without an invoice. So when it is goods removed without an invoice, you have not complied with the provision of Section 12 of CGST Act. So they have the right to levy penalty for that non-compliance. Okay, inward register is very, very important. Inward register will help you to identify the type of inward, whether it is input services, or it is a capital goods. In the present GSTR-9, it is obligated to every registered person to report their capital goods inwards separately, the credit claimed on the capital goods separately. Okay, inward and inward of input and input services can be clubbed together and can be reported, but with respect to the capital goods, it has to be reported separately. Secondly, I should have the documentary proof as per the Section 16, subsection 2. I cannot take the credit unless I have a documentary proof. Okay, we have witnessed in many cases, in many audits, people have claimed the credit only because they have received the transaction in GSTR 2B. So just because you have received the transaction in 2B, that does not mean it is your inward. It should be reported in your books, and then you should have, and for reporting, it's but natural you will be having a supporting document. So if it is not reported in your books and you are taking the credit, then it is treated as violation. Okay, it's treated as violation. The entire credit will be challenged along with the interest and penalty. The third one, it's very important, classifying the transaction, whether it is common credit or whether it is a regular credit. So to carry out Rule 42 reversal, Rule 43 reversal, you have to do an exercise of identifying what is common credit. It is a thumb rule. It is treated as a thumb rule that all my financial cost and my administration cost are treated as common credit. So the administration cost and financial cost I can treat as a common credit with the help of the inward register and do Rule 42 for the purpose of doing a reversal of ITC. Abiding with Section 16(4) and Rule 37. Section 16(4), I cannot claim a credit of the previous financial year of the invoice, previous financial year invoice, after filing my October's return or any return filed on or before 30th of November. So I should have the proof that I have claimed the credit of the previous financial year well before the deadline, because what we are reporting in GSTR 3B is only a consolidated value, and this consolidated value will be requiring the detailed breakouts. So during the audit, we have seen that the officers are asking to give monthly inward registered, because the credit has been claimed and again it is reversed. It is permanently reversed, it is temporarily reversed. So you should have the data with you in form of inward register to establish that you have claimed the credit well in time, and you have reversed the ITC if you are not paid to the supplier in time. Reverse the ITC under Rule 37, and you can claim the credit any point of time once you make the payment to the supplier. Stock register will help you to establish that you have received the inward. Okay, and the stock register will also help you to establish the reversal which is required under Section 17, subsection 5, on in case of gifts, in case of fire, in case of theft. So that stock register will help you to establish what was the cost and what was the ITC attributable to that inward which got fired, which got lost, which got theft, or which you have given on a gift. So these are the three principal registers which you have to maintain. In particular, if you don't maintain, then the data which you are filing, in GSTR-9, the 9 which you have filed, if it is not backed with these registers, has no meaning. Besides the three principal registers, the GST rule also have prescribed three secondary registers like import register, export register, to establish the compliance of Rule 96A, Rule 96B. RCM register is one of the very important registers in the present date, where you are supposed to maintain self-invoice. And I know that till today, no one has asked you to give the self-invoice for the purpose of claiming the credit from the tax which you have paid for the unregistered supplier. But I will tell you, since they have brought a change in the GST law for the purpose of preparing a self-invoice, that the point of supply has been changed, that from the date of receipt of the inward, within 30 days, you have to prepare a self-invoice. So if you don't make one, I'm telling you, the entire credit will be challenged. And the final one, advanced register. During the course, we will see what is the importance of this advanced register. So let us start discussing on the form. The form part 1 starts with the basic detail like financial year. For the current year, it is 2023-24. GSTIN. If I have 4 GSTIN, I have to be very careful which data I am filling in, and accordingly I will fill the GSTIN, legal name, trade name, which will be pulled from the GST registration form. Reporting of outward supply in table number 4, table number 5, 10, and 11. So to report the transaction of my outward supply, I will take help of my outward register, my export register. Okay, so these two registers I should maintain. I'm telling it is outward register. It is not my sale register. My sale register will always give me the sale detail, but in GST there is nothing called sale. It is supply. So in case of supply, it is outward register, outward supply register. Okay, because when I do stock trading, when I move the goods from one GSTIN to another GSTIN, when it is treated as a cross charge. Okay, even the cross charge, though I'm not going to receive though I'm not going to get financially benefited by the transactions, but it has to be reported in the GSTR1. There are some Schedule 1 transactions, like transaction with my employees, which also has to be reported. Okay, so keeping that in mind, it is not a sale and it is only a supply. I always call the register as outward register. It is not the sale register. There is a bridge gap. There is a bridge gap between the sale register and outward register. So the outward register, I have my serial invoice wise, date wise, category wise register available. And with the help of my outward register, I will start preparing my table number 4, 5, 10, and 11. Table number 4, clause B, B2B transactions. So whatever transaction I have already reported in my GSTR-1 for the year should be reported here. Okay, so during the financial year 2023-24, in my GSTR-1 under B2B for the year, there can be a scenario where a transaction of the previous financial year, which is 22-23, has been reported in GSTR-1 of the current financial year. I am not supposed to report those transactions, because if you read the heading, it categorically says that detail of outward and inward supply made during the financial year. So if I have reported 12 transactions in my GSTR-1, and out of 12 transactions, 2 transactions were for the past financial year, which means for the year 2022-23, I am not supposed to include that. I will report only that 10 transaction in table number 4. Okay, so in that 10 transaction, 4 was for B2B. So that B2B 4 transaction will be reported in clause number B, B2B. So B2B can never change. B2B should be the same. Okay. Coming to the next one, zero rated supply on payment of taxes. So zero rated supply, first I will go to the export register. I will compare my outward register and my export register. I will take the transaction as zero rated supply only if it satisfied the section 16. Section 16 says export of goods, export of service, supply to SEZ unit. So section 16, here it is zero rated supply, export on payment of taxes. So when it is export means the good should leave the country. Okay, so the good should leave the country, then it is export with payment. If the goods remains within the country, then it is not an export. So there are transactions where the foreign company may place an order to your company where they will tell that the goods has to be delivered to another person within the taxable territory, and the invoice is raised in foreign convertible currency. Just because the invoice is raised in foreign convertible currency, money is received in foreign convertible currency, you have made the payment of IGST, that does not mean it is a zero rated supply. You might have reported the transaction in table number 6A, but it is not a zero rated supply because the goods had not left the country. So I have taken my outward register, I have compared with my export register, where the export register does not have the shipping bill detail, which means it is not exported. So when it is not exported, it is not a B2B transaction. So it will be treated as only B2C transaction. I will not report the transaction in B2 in zero rated supply export because the goods have not left the country. I will take it to B2C transaction. Supply to SEZ on payment of taxes. Okay, now the supply to SEZ. When it is SEZ supply, it is SEZ supply only when I do the transaction for authorized operation, for their authorized operation. So only in those cases it will be treated as zero rated supply. I may do the business with the SEZ unit, but the SEZ unit, if they are not going to give me a procurement certificate, DTA procurement certificate, then it is not a zero rated supply. So to fill this clause, I have to visit my export register again. I will go and check whether the procurement certificate I have received or not. So if I received the procurement certificate, the transaction stays as supply to SEZ with payment of taxes. If I not received the procurement certificate for the transaction, which means I cannot apply for the refund, then I will treat the transaction as pure B2B supply. It's only a B2B supply. The SEZ unit is eligible to take the credit. SEZ unit is eligible to take the credit. They can apply for the refund. But in my view, section 16.2 will come, and if it is not for authorized operation, then there also they will not be able to take the credit. Okay, so deemed export of goods. There are 4 transactions which is treated as deemed export of goods. Again, there is a good amount of procedure which has been prescribed. Previously, it was ARE2 procedures which we used to follow. ARE2 procedure. Now in GST, it is A1 and A2 procedure. We have to give a procurement certificate from the customs. We have to get the procurement certificate from the customs, and a big chain of compliances has to be done to carry out the deemed export transaction. So only when I do, and in this case, in my GSTR1 itself, I might have done deemed export. I might have ticked it as a deemed export. So only if I ticked it as a deemed export, I'm eligible to put the transaction here. Otherwise, it is only a pure B2B supply. Okay. Now B2C supply, it is a remaining whatever I have reported as B2C, whatever I have not reported, that will also become B2C. For example, there is a exemption which I have claimed in GSTR1 in 3B. But later on, my chartered accountant has told that, look, this is not exempted transaction, it is taxable transaction. I want to pay the tax. So in that case, it is B2C, because thereafter I cannot pass on any credit to anybody. So it is a B2C transaction. My chart, there can be like export, which is done. It's not an export. The goods was delivered within the taxable territory. Then also it is B2C transaction. It is not export transaction. So everything will be reported only in B2C transaction. It is, and in bottom line, it is called residual transaction. The clause number F, very important. In case there are 2 industry which works only on advances. One is construction, other one is Kalyana Mandapam. Advances on which tax has been paid, but invoice has not been issued. For this, we have to visit to this example. Okay. So in the current year, I have opening balance of 45,000. Advance received during the financial year is 50,000. The adjustment which I have done in my GST R1 is to the tune of 67,000. My closing balance as per the books is 28,000. But when it comes to GSTR9 auto-populated values, when it comes to GSTR1, I have reported advance of 50,000 in GSTR1. I have reported 67,000 as adjustment in GSTR1. So the auto-populated as per the Form GSTR-9 is 67 minus 50,000, which means minus 17,000. So one of my article came and asked me, sir, we are getting an auto-populated value of auto-populated figure in GSTR9 as minus 17,000. Is it correct? So I asked my article, can any time an advance run into negative? So if an advance runs into negative, will you be able to call it as an advance? The answer was no. So the advance should always be a positive value. It cannot be a negative value. Then my article asked, then why it is coming as negative? It is coming negative because it has taken previous year adjustment also for the purpose of reporting, which is not correct. So I'm supposed to take only the current year transaction, current year adjustment, which has to be adjusted with the current year advance. So I have received the advance of 50,000, and the adjustment which I have done from that 50,000 is only to the tune of 35,000. So 50,000 minus 35,000, I have to report advance. See, look at the language. It says advance on which tax has been paid, but invoice has not been issued. So advance I have received of 50,000. Adjustment I have done out of that 50,000 is only 35. So the balance is 15, which I have to report here. So if I report the 15,000, if I report 15,000, what will happen to my opening balance of 32,000? The credit, the tax credit, which is attributable to 32,000, what will happen to that? So because it is but natural, when it is minus 17, okay, minus 17, I'm going to make it positive to 15, what will happen to 32,000? Okay. So that was the challenge. So when you go and see GSTR 9 table number 9, okay, GSTR 9 table number 9, it talks about tax payable for the year. Okay, talks about tax payable for the year under various heads, and it talks about tax paid through cash. So in my view, that that difference of 32,000 should be reported here. So in my view, that difference has to be reported here. Okay. 32,000 has to be reported in GSTR 9 table number 9. Okay, so your 4N and your 9 entry in 9 will not match. It will not match because the difference should be the opening adjustment, opening GSTR, opening adjustment of the advances from the opening balance. So that should be the difference. Otherwise, you are not doing the correct reporting. Otherwise, there is no correct reporting. If you put minus 17, it is not a correct reporting at all. So it has to be minus 30, plus 15, plus 15. Okay. Clause number G, we will come later in later stage. If you see this clause number H, it says subtotal of A to G1. But in this table, there is only up to G. What is G1? G1 is a new entry which has come for eco supplies. Okay, so e-commerce operator like Redbus, the restaurant aggregators like Swiggy, Zomato, they are supposed to report their transaction in GSTR 1 and 3B separately. In GSTR 3B, it was 3.1.1. In A, the aggregator will report. In B, the person, the restaurant owner, is supposed to report. Okay, so the aggregator, when they are reporting, they are obligated now to report the same transaction. Okay, the transaction in G1 column, which they have introduced in the current financial year. So in G1, the supplies on which e-commerce operator has paid the tax under section 9 subsection 5 has to be reported here. And the registered person, the owner of the restaurant, who has reported the transaction, his exempted transaction in 3.1.1B or 2, he can report the transaction under the table number 5. Okay, he can report the transaction in table number 5. But e-commerce operator has to report in G1. So clause number 4, credit note, debit note, amendments. Okay, amendments, upper amendment, lower amendment. Now the issue is, what is difference between the amendment and when I'm supposed to issue the credit note and debit note? This is a big challenge. People don't understand the importance of doing self-assessment. They don't understand that self-assessment means issuing a proper document. If they don't comply with the self-assessment, they will be in trouble in future. They will be they are calling for a trouble in future. Okay, when I'm supposed to do an amendment, I have issued the document, my tax invoice, which has a proper values, proper data. Everything is proper. I have issued to the recipient. And at the time of keying in the data in GSTR1, I made a mistake. To correct that mistake, I can do an amendment. Okay, to correct that mistake, I can do an amendment. But if the document itself is wrong, okay, the document contain the values which is wrong. Okay, section 34 has prescribed only two conditions. Okay, two conditions under which you can issue debit note or credit note. There are 4 conditions, but 2 are particular in connection to this discussion. One is change in rate and change in value. Change in GSTIN, wrong GSTIN, you can do amendment. Though the invoice is issued to say XYZ with the ABC GSTIN, you can correct that invoice, but do the correction in GSTR-1. The XYZ will receive the credit because he have a document with him. But what if the value is wrong? The rate is wrong. So when the value and rate is wrong, you can give credit note and debit note. And a couple of months back, there was a circular which made it very clear that in case of credit note, you have to get an undertaking from the recipient that stating categorically that he has reversed the input tax credit for the credit note which you had issued. Okay, so we know what happened for 183 bar 15 bar 2019 circular. Okay, we know what happened to 193, whether we were able to collect from our supplier their undertaking. So when we were not in the position to collect anything from our supplier, he is our recipient, the person who is going to pay to us. Okay, whether we will be in the position to collect it. Okay, it's a question mark. It is a big question mark. So after appreciating when to issue amendment and when to issue credit note, debit note. Okay, so amendment, if you have done an amendment, I sincerely say that since amendment has already been done, I have the outward register which has the proper data. I will not report the amendment here. I will report the actual value in B2B and B2C values. If I show amendment, then there is a possibility the officer will ask, give me the invoice which you have amended. Prove me what was the amendment. Okay. Instead of that, I will put it in B2B, B2C export in respective heads. Credit note and debit note. Now the time has come where the officers have started asking, if you have raised a credit note, please give the or prove that your recipient has reversed the input tax credit. Okay, the time has come now, so be careful. So if more credit notes, more documents to be collected from the recipient. Debit note, whenever you issue debit note, there is a famous case law in Central Excise Steel India Authority, where Supreme Court has come out and told that in case of any supplementary invoice or a debit note, the point of supply is the original tax invoice, date of original tax invoice. And if you're making the payment now belatedly, then it will be subject to interest. So be careful. If you issue debit note also, then there is an interest applicability on it. Now, the issue comes here is when I'm supposed to report the transaction in entry number 10, 11, and 14. When I'm supposed to report. In my outward register, assume I have 10 transaction. Out of 10 transaction, I have reported 9 transaction in GSTR-1. So since I have reported 9 transaction in GSTR-1, I have paid the taxes for that 9 transaction in GSTR-3B. So it goes without say that 9 transaction has to be reported in my table number 4. The one transaction which is left out, I have 2 options. Either to report the transaction in my subsequent financial year GSTR-1 and pay the taxes in the subsequent financial year through GSTR-3B, or not to report the transaction and pay the taxes through DRC-03. Okay. So in first instance, where the taxes is reported, the transaction is reported in R1 of the subsequent financial year, and the tax is paid in the next financial year through GSTR-3B, then the transaction, that line item needs to be reported in entry number 10. It has to be reported only in entry number 10. If the tax you are going to pay through DRC-03, or you have paid the tax through DRC-03 and you are not reported anywhere, then you have to report the transaction as B2C supply and bring that transaction here. Definitely there will be a difference. In table number 9, there will be a difference which you can demonstrate to the officer with the help of the DRC-03 which you have paid. Okay, so this is with regard to when the transaction has to be reported in entry number 10. In case of credit note, in case of downward amendment, the first thing is whether the downward amendment has been reported in GSTR-1, whether the credit note has been reported in GSTR-1. That is the first assertion which we have to satisfy ourselves. If the answer is yes, then I will proceed further. If the answer is no, if I have not reported the credit note, I don't have the right to report the transaction, the credit note in GSTR-9. It's not correct. It's legally not correct. Because you have filed your GSTR-1, you have uploaded a tax invoice, given an opportunity, a benefit, a passed on a benefit to the recipient who has claimed more credit. And the credit note, the purpose of issuing a credit note is to allow the person or to intimate the person that you are going to take the tax credit of this tax amount and he is obligated to reverse the ITC. Okay, so if you are not informed the recipient, then you don't have the right to take the tax credit of the credit note. Okay, so the first assertion is whether it is reported, whether the downward amendment has been reported. If the answer is yes, you proceed further. Okay, then you have to check when it was reported, whether it was reported in the current financial year. If it is reported in the current financial year, the line items, the credit notes, the download, the amendment will be reported in table number 4. If it is reported in the next financial year, then it has to be reported in entry number 11. Okay, so there is only 2 circumstances: either reported in current year, take it to 4; reported in the next year, take it to 11. There is no third option, which was there previously for entry number 10. If you are not reported, report now and pay the taxes. Here you cannot report and claim the refund. That's not possible. You cannot claim the refund. But refund is permitted if you have reported the credit note and there is no transaction to absorb that tax credit. For example, there is a credit note in the month of April. In the month of April, you have raised one credit note, say for 4 lakh rupees, and the transaction, your total payout for the month of for the month of January, you have raised a credit note for the 4 lakh rupees. The tax credit is for 4 lakh rupees, IGST, and in the month of January, there was a payout of 1 lakh rupees. Feb, there was a payout of 1 lakh rupees, and March, there was a payout of 1 lakh rupees, and thereafter there is no payout at all. Up to the November, you have to wait up to November, and after November, you have decided that there is no payout. So this results into an excess payment. 4 lakh, you have only exhausted 3 lakhs in the subsequent tax periods. So which means you are left with 1 lakh tax credit, which you have reported in GSTR-1. So in that case, you are eligible for the refund. There is a circular 137 which categorically states that you are eligible for the refund, provided you have reported the credit note in GSTR-1. Okay, your GSTR-3B negative value is not accepted. I agree. It does not accept a negative value, but you can report the transaction in GSTR-9. In table number 9, you will get the positive difference, and that positive difference is a credit note, it's the refund for you. Okay, so you will get the refund of that amount.
Excuse me, sir.
Hello?
Excuse me, sir. Sir, here I have one doubt.
Yeah.
So this unutilized credit note value, within how many days I can apply for refund, sir?
No, you have to wait till November, sir, 30th November.
Yeah, that is
means-
also lapsed. So for example, what happened in my case, I'm telling.
Yeah.
In 2018-19, we have issued credit notes.
Okay.
So that is over and above our outward tax liability.
Okay.
So we have not adjusted.
Okay.
So, and we have not claimed refund also till date. In that sheet,
Oh,
you don't have any outward tax liabilities.
okay. You missed to. You should have heard my uh, lecture previously.
Sorry,
Okay.
sir, I couldn't. I
Now,
couldn't, sir. Somehow.
no, that's what 2 years time limit is gone now.
Okay.
So if it
Okay.
was 2018-19, then
Yeah.
you should have taken your refund claim at least in the year 1920. And due to COVID, it was further extended till 2021. So at least up to 21, the credit was, the refund opportunity was there. You could have made an application. Now you cannot do that.
Okay, sir. Understood, sir. Thank you, sir.
Yeah, my pleasure. Thank you. Yeah, table number 5. Table number 5 is one of the important table which we have to be very careful when we prepare this, because here we are not paying anything to the government. First one is zero rated supply, export of goods, export of service. Again, I will visit to my export register, my outward register vis-a-vis export register. I will check in case of goods whether I have received all the shipping bills. In case of service, I have to categorically check whether I have received all the foreign convertible currency. I will also check the compliance of rule number 96 capital A. I will check compliance of rule number 96B if I have taken the refund. If I have taken the refund, I will check the compliance of rule number 96B also, only if I have claimed the refund. Okay. So if it is proper, if it is going with table number 6A, then I will report the transaction in 5A. 5B, supply to SEZ units without payment. First, LUT, whether I have, even for the export, I should check whether LUT is available, a valid LUT is available. Second, I have to check whether I have obtained a endorsement in the tax invoice. Now the endorsement process has been changed to, now the only thing is you have to get the DTA procurement certificate. So you have to check whether for each and every invoice which I have issued to the SEZ unit, which I have reported as without payment under LUT, whether I have received the SEZ procurement certificate. SEZ procurement certificate, if you don't get, then please send a reply or send a communication to the SEZ unit categorically stating that you are going to send the debit note containing the tax portion so that they can take the credit and you are relieved, so that you can make the payment with interest. Interest will only be the damage for you at this stage, and if you don't react in this stage, then interest as well as penalty will be there. Okay. So if the audit, during the audit, the officer finds out that the tax has not been paid and there is no compliance, there is non-compliance, then he is definitely going to come behind you demanding for the tax, interest and penalty. Okay. So the third one, supplies on which tax is to be paid by the recipient on reverse charge basis. So here you have to ensure that the recipient is a proper person who is eligible to pay the tax under reverse charge. We have seen that there is, in case of sponsorship, the recipient should be either a corporate body or a firm. We observed that instead of giving invoice to the corporate body and the firm to be paid under reverse charge, each and every one, any invoice which is issued for the purpose of sponsorship, the trust, the sports body has given it under a reverse charge. Even for the individual, they said it is to be paid under reverse charge, which is not correct. Individual will never pay a tax under reverse charge. Why he will pay? Okay, he is not registered itself. So you have to see who is the recipient, whether the recipient is subject to pay the tax under reverse charge. If the answer is yes, you will report the transaction. Otherwise, you have to take the transaction to B2C supply and pay the tax through DRC 03. Exempted supply, nil rated supply, and non-GST supply. For this, you have to understand the term exempted vis-a-vis nil rated. Exempted means it is exempted by a notification. Nil rated means it is a rate. Nil rated means it is a rate. When GST was introduced, it came up with 5 rates. Nil rate, 5%, 12%, 18, and 28. 5 rate. Nil is a rate. It is not exempted. Zero rated is different. Exempted is different. Zero rated may include nil rated, may include exempted, but exempted is not zero rated. It is different. Non-GST supply means any supply which is not subject to GST. So there are two products, there are two goods. One is supply of alcohol and supply of petrol, diesel. Okay, so those two are non-GST supply. And there is new term called no supply. And what is no supply? Anything which is neither a goods nor a service, anything which is neither a supply of goods nor a supply of service. So there are certain things which has been removed from the definition of goods, certain things removed from the supply of service. And schedule number 3, they have prescribed certain things in schedule number 3. So that is no supply. So if you are selling a land, if you're selling a building, that transaction you are not supposed to report in GSTR 1 and 3B, but it is to be reported in GSTR 9. It has to be reported in GSTR 9 because in GSTR 9, they have brought an amendment. In clause F, it is no non-GST supply. In bracket, they have told including no supply. So the no supply will be reported only in GSTR 9, not in R1 and 3B. So to further appreciate what is difference between the input, no supply, taxable supply. Okay, I've taken one example, interest. Okay, in every balance sheet, in every profit and loss account, we'll be having something called interest. Okay, so there are 3 types of interest. One is interest from sundry data, interest from bank, interest from income tax department. Okay, now when I receive the money from the bank, it is because I have deposited certain money with the bank, and the bank for that keeping that money with them, which they have utilized for their business, they have remunerated me in form of interest. So this is covered by exemption notification 12/2017, hence it is exempted. Okay, income received from income tax department. When I received why I'm getting this interest? I got this interest because I made certain advance tax payment. Okay, and that advance tax payment turns out to be an extra payment, and because of which I'm getting the refund. Okay, so when I made the advance payment, I never had that intention to earn this interest. Okay, I never had an intention to earn this interest. And for the supply, intention is important. Okay, so since there is no intention to earn this interest is no supply. Okay, I never had that intention to earn interest from income tax department. So this is no supply. Third, I received the money from the sundry data. If the original transaction is taxable, and I in my tax invoice I have written that if you don't pay me within the period of 30 days, okay, and any payment after 30 days will be subject to say 5% interest, 12% interest, 13% interest. That interest which is collected with the help of issuing a debit note will be subject to a tax if it is a taxable supply. If it is exempted supply, again, a composite supply will come and it will be treated as exempted. So it is widely covered by a circular 178. Reporting of a transaction under which is reverse charge. Okay, reverse charge, very important. I will have my reverse charge register prepared. Okay, and from that register, after going through my checklist of reverse charge, where all I'm supposed to pay, what are the ledgers which is subject to reverse charge, which is accounted in the books, I've taken into cognizance of those, and I prepared the register. I've cross-verified with the Form GSTR 2B and checked whether the entry which is appearing in 2B, I have made the tax payment or not. If I have not made the tax payment, then why it is appearing in my GSTR 2B? There can be a possibility that that transaction is from a registered supplier who has done FCM supply to me, but inadvertently he has marked as reverse charge. So in that case, I will get a letter from him. I will get an undertaking from him that he has done a mistake, because in audit, the audit officer is just going to go there and go see whether I have made the payment for that line item or not. If he is going to establish that I have not made the payment for that line item, then he is definitely going to come behind me for the tax and interest. So better to react at the time of filing annual return. Check your 2B also, check your books, whether it is accounted, it is not accounted, where it is accounted, and pay the tax if it is not paid. Because here, up to 30th November, there was a time limit where you could have reacted during tax audit. You could have made them pay in GSTR 3B and allowed them the credit. The only thing is interest was the damage. Okay, so in that scenario, where the transaction is paid in the next financial year, so in my RCM register, there are 100 line items, and 5 line items, I have paid the taxes in the year 2023-24. So if I made the for 23-24 95 line items, I will report that 95 line items in my GSTR 9 as well as 9C. Okay, so so this is very clear. So what happens if for the balance 5 line items, if I agree to pay that balance 5 items through DRC 03, because after 30th November, yes, there is no scope, I have to make the payment. Okay, I can take the credit, but that credit will be challenged under section 16 subsection 4 for registered. For unregistered, the clarification has come. I can prepare the credit, I can prepare the tax invoice now, self invoice now, pay the penalty for belated payment, belated preparation of the self invoice, but credit is allowed. That is what the government has said in the clarification. So 5 invoice, if I want to pay now, I can report that in GSTR 9 and 9C, I take the credit. But I sincerely say that that is not the correct mechanism. Don't pay anything through DRC 03 for claiming credit. Okay, so if you want to claim credit, pay only to GSTR 3B. So the second thing, 95 I have paid in the previous year, 23-24. I reported in GSTR 9. Okay, but in GSTR 9C, I have to report 100. The entire thing I have to report. There will be a difference in my GSTR 9. 9C, I will tell that this difference is because the ITC, because the RCM liability has been discharged in the next financial year and the credit has been claimed in the next financial year. Okay, next financial year, these 5 line items will be reported along with the previous year, along with that year's RCM transaction, that is 24-25 transaction, because that is there in GSTR 3B. So whatever is there in GSTR 3B, it will be reported in table number 4 of 24-25. When it comes to GSTR 9, they will exclude. We are not supposed to include this 5 transaction in the next year GSTR 9C. It should not be reported. Okay. So again, there will be a difference because in 9 I have reported, 9C I am not reporting. So there will be a difference. And here I will write the comment that this difference is the payment for the previous financial year. So in previous year's GSTR 9C, that is for the year 23-24, I will tell that I have paid the taxes in the subsequent financial year, that is 24-25, claim the credit in 24-25. And in the current year, I am not going to report the transaction, that 5 transaction in 9C, which will give me a difference. And this difference, I'm going to say that this is for the previous financial year. So when the department auditor comes, I can show both the GSTR 9C to establish that, yes, I have paid the RCM at the later stage, taken the credit at the later stage, and the 9C is the proof that at one place there is a liability, in another place there is a payment transaction. Okay. Reporting the transaction in GSTR 9. So my outward liability, my RCM liability has to be reported in my GSTR 9, table number 9. So I will report as tax payable. Basically, what is expected is table number 4N value has to be reported as tax payable, but there are certain exceptions where it is not only table number 4N, but there are certain other transactions also which has to be embedded. Paid through cash and paid through ITC is auto-populated. So if you do 2 minus sum of 3 to 7, you will get some value. Okay. If you get a positive value, which means it is payable, you have to check whether it is you have made the payment through DRC 03. If it is a negative value, then you have to check, is it because of the previous year transaction which you have reported in GSTR 10 of the previous financial year. Okay. So in entry number 9, tax payable, tax payout from 4N, or it can be the input tax credit reversed by adding to the outward tax liability. So there are certain situations like I have claimed a credit of 100 rupees, but I have done a reversal of 300 rupees. So in that case, 100 rupees will get set off with that 100 rupees. Okay, 100 rupees credit will get set off with the 100 rupees credit which I had availed. 200 rupees will be added to your outward tax liability. So in those scenarios, the 200 rupees has to be added along with your 4N, or added to along with your 4N. Then only you will get the difference. Then only you will get the equal value. You will not get the negative value. Okay. You will not get negative value. There can be another situation where certain transaction of the previous financial year, you have made the payment now through GSTR 3B. So when you have made the payment through GSTR 3B, you have to go and see the difference, whether it is equated to the value reported in entry number 14 of the previous year GSTR 9. Okay. So this we have already discussed with regard to the advances. Reporting in table number 9, reporting in table number 6, 7, and 8, input tax credit. Here I have to take the help of my inward register. I already told that inward register helps for the various purposes. Okay, I can identify, I can classify whether the input tax credit is from input or capital goods or input service. So input and input service can be clubbed together in the present reporting. Capital goods has to be reported separately. Okay, the entire form is designed in beautiful way. It is designed very beautifully, where they categorically says that if in one section it relates to one area. For example, table 6B. Okay, here you cannot take a fresh credit. As I told you before, you cannot take fresh credit. They want you to only report the credit which you had already claimed or already taken in in your e-credit ledger. You are taken into your e-credit ledger. So 6B is from all other ITC. Okay, so it should match with your GSTR 2B. So the intention is it should match with your GSTR 2B, because since after introduction of GSTR 2B, we are expected to take only that which is appearing in GSTR 2B, and it is supported by a section 38 read with the section 16 subsection 2 clause A. Okay, so only which is appearing in table number 2B, I will be claiming here. Okay, and in clause number H, there can be a situation where I have claimed, reversed the credit, and have reclaimed. In my GSTR 3B, there is a clause where I'm supposed to report what is reclaimed. So what is claimed will come in 6B, which is nothing but my IT, which is nothing but my 2B. Okay, so I am expected to report entire 2B in table number 6B. My reclaim, I'm expected to be reported in 6H. In 6H, I have to report. Okay, and clause number C and D is very important. Is very, very important. Clause C connected to my self-invoice. So if I report anything here in clause C, they are going to come and say that please give me the self-invoice to the tune of this value. Then only the credit is permitted. Otherwise, I'm not going to give any credit. For that, you should have the RCM register, where you can determine what is the place of supply. You can determine what is the point of supply. You can determine whether the supplier is registered or unregistered. If you don't have RCM registered, I don't think you will be able to give this breakup. Clause number D is connected to the reverse registered supplier, where the tax has to be paid under reverse charge. This definitely will be compared by the tax officer from GSTR 2B where the supplier has marked the transaction as to be paid under reverse charge. So that is why I'm asking you to ensure that you have done this exercise. You have checked that you have paid the taxes for the entire transaction which is appearing in GSTR to be as a RCM. If you're not paid, then there is a sure liability on your head in the future. Clause E, import of goods including the supplies from SEZ. That means you should have a bill of entry with you. If you have a bill of entry, you will be in a position to report this transaction. Import of service, again, self-invoice to be with you. Input tax credit received from input service distributor. Input service distributor tax invoice should be available with you. So it is entirely based on the documents which is with you. So the officer can plug any one of the clause and say that I want only these documents along with the list. Please demonstrate I'm allowing you credit, otherwise I'm not allowing you the credit. Okay. Clause number K. Translation, Tran 1 credit and Tran 2 credit for the year 2023-24. I don't think there will be any Tran 1 and Tran 2 credit. Any other ITC availed but not specified above. As per rule number 36, only 4 documents has been prescribed where you can take the credit. One is tax invoice of the supplier, which will be there in 2B, which I told should be reported in 6B. Second one is self-invoice, which I told should be reported in clause number C. Then bill of entry, which I told should be reported in clause C. Okay. Then something called input service distributors invoice, which I told should be reported in I. Okay. Then there is no 5th document. So when there is no 5th document prescribed in the law where I can take the credit, how come there is something called any other ITC available but not specified above? So this is for the transaction where I have filed ITC 02. Okay, in case of amalgamation, in case of takeover, in case of demerger, in case of death of a proprietor, in case of change in constitution, the person will file ITC 02, will pass on the credit available with them proportionately in case of merger or 100%, and the recipient is eligible to take the credit by accepting the ITC 02. So when you accept the ITC 02, the credit get recredited. The credit get recredited to ECL. So that credit which is got recredited to ECL by filing ITC 02, by accepting ITC 02, has to be reported in clause number M. So that is the purpose of clause M. And it is exceptional clause. It is not regular clause. Clause number, table number 7, as per rule 37, 39, 42, 43, 17.5, reversal of Tran 1, reversal of Tran 2. If you don't know, then you can report everything, anything and everything in other reversal. But I sincerely say that now present filing mechanism, a modus operandi which we are doing, where they say that there is a permanent reversal and temporary reversal. My permanent reversal, I will report everything. I will report in 17.5. The purpose of permanent reversal is that I am not eligible to take the credit. Okay. Hereafter, I am not going to take anything. So the permanent reversal has to be reported in 17.5, and the temporary reversal has to be reported in all other ITC. Okay. So rule number 37, rule number 42. 42 is also a type of permanent reversal. 43 is also type of permanent reversal. But rule 37 is not a permanent reversal. It is a temporary reversal where you are eligible to take the credit if you make the payment to the supplier. So you can report the transaction in clause number H. So there is only 2 type of reversal now required. One is permanent and temporary. Permanent, as I suggest, report in 17.5. Temporary reversal, which you are eligible to reclaim in the subsequent month, you have to reverse in clause number H. Okay. Now coming to the main table, table number 8. very important. A, a, a good amount of exercise has to be done here. Okay. So table 8 in the present era of 2B, where I have to claim only 2B. So the 2B value has come in table 8A. In table 8B, it has pulled the data from 6B and 6H, which is again 2B plus reclaimed, plus reclaim. Now C, they want me to report those transaction which is appearing in 2B, but I have not claimed now. I have deferred it, where I will claim in the next year or up to November. In deferment, it is not possible. Okay. Or which I am going to defer. I have deferred in the next year, which I am going to claim in the next subsequent year. So that deferred credit I have to report in clause number C. Okay. Assume in 2B, I have received 100 rupees. Okay. 100 under the head of high GST. So in 6B, I had already reported 100. I have deferred 40 rupees. I had deferred 40 rupees, which I have already reported in table number 7B. In 7 in table number 7H, I have reported that 40 rupees deferred. And out of that 40 rupees, 20 rupees I have reclaimed. So 100 and 20 I have 100 is from 2B, 20 I have reclaimed, which means I have claimed 120. So in 8, it will be 100 compared with 120. I will definitely get minus 20. Okay. And 20 is balance deferred, which I'm eligible to reclaim as per the clarification given by the board. They have told that you can claim this any point of time, because rule 37 allows you to make the payment, allows you to take the credit when you make the payment to the supplier. So this 37, I can claim any point of time. So I'm going to report 20. So when I report 20, I'm comparing 100 minus 120 minus 20. I should get minus 40, which is nothing but my reversal, temporary reversal, which is minus 40. So if you can demonstrate this, if this goes proper, if you get minus 40 here, which is already reversed as temporary, in my view, you will be in a good position to answer your assessing officer. Otherwise, it's going to be a tough. Otherwise, which means the client has taken extra credit, which is not there in 2B. So which means that is a reversal required. Payment of tax is required along with interest and penalty. Another thing is continuing. It is the same. So clause 15 is it's not mandatory. Clause 16 is not mandatory even this year. Clause 17 is mandatory. You are supposed to give HSN wise data. In case your aggregate turnover is above 5 crore, you are supposed to give 6-digit HSN. If it is below 5 crore, then you have to give 4 crore. Okay. Now it is only 4 HSN and 6 HSN code. There is nothing called two-digit HSN code. Late fee, if you don't file this in form on or before 31st March, then the late fee proposed previously was 100 rupees per day of delay to the maximum of 0.25%. But after the notification, it has come down. If your turnover is up to 5 crore, then it is 25 per day of delay, which is 25 plus 25. The maximum is 0.02% of the state turnover. If it is between 5 crore to 25 crore, then it is 50 plus 50 per day of delay, or maximum of 0.2% of the state turnover. If it is about 25 crore aggregate turnover, if about 25 crore, then it is 100 per day of delay, 100 plus 100, maximum of 0.25% of the state turnover. And after filing this form, you have to give an verification which says that true and correct. Why it is true and correct? Because they want you to prepare this form with the help of section 35. Section 35 also have the same language, true and correct. You have to maintain true and correct books and accounts. So that true and correct is replicated here. So which means you have to use your books, and as soon as you file this form, you are indicating to the officer that you are ready for the audit. Beside that, you are also telling that in case there is any reduction in the outward tax liability, okay, in future, like I have collected the money from the from the recipient, I have paid to the government, and government has come up, like Supreme Court has come up, that your tax activity is not subject to 18%, it is subject to 12%, then it's not you who can apply for the refund. It is deemed that the money is for the recipient. Okay, the recipient is only eligible. Okay, so he can only apply for the refund. So this is all about GSTR-9. Now coming to GSTR-9C, turnover reconciliation, and why this turnover reconciliation is important. Turnover reconciliation is important because my GST is based on time of supply. I raise invoice based on time of supply, whereas I account my books using my accounting standard, which is revenue recognition. For example, I have raised an when I move the goods to my recipient, or when I move the goods from my factory, it has to be removed under the cover of a tax invoice. So I have prepared the tax invoice, and that is tax invoice I have to report in my GSTR-1. But as far as the contract is concerned, it is only when the recipient takes the goods in his books, okay, and agrees to take the goods, then in that case, it is not reported as sale in my books of accounts. It is only a stock in transit. So in my books, it is stock in transit, but for the purpose of GST, it is already reported as a supply. Okay. We also know what happens in case of unbilled revenue. Okay, unbilled revenue, the invoice is raised on the later date, but whereas the income is accounted in the books of accounts. So the books and my GSTR-1 or GSTR-3B should not match, must not match. Okay, if it match, that means that the entire books is gone for a task. Okay. GSTR-9C have 5 tables. Part B is gone. Okay, now we don't have any role. Now there is only table A, part A. Part A has 5 parts. As usual, basic details, which is very preliminary. Part 2, reconciliation of a turnover declared. Part 3, reconciliation of tax paid. Part 4, reconciliation of input tax credit. Part 5, additional liability, if any. Okay. Part A, financial year, GSTIN, legal name, trade name, it's all regular. But the issue comes when it is with regard to the gross turnover comparison. Okay, why there is an issue? The issue is because my audited financials is for the company as a whole. But if I have a multiple GSTIN, then I have to find out with the help of my registers what is the exact turnover. Okay, and this trial balance which I'm going to prepare, GST-wise trial balance. In GST, you are supposed to maintain GST-wise trial balance. Many times people have asked me, why are you insisting me to maintain GST-wise trial balance? So you just go back for the VAT audit. The VAT officer, whether they were not asking you to prepare a TB, or whether they were not asking you to give the trading account. So when you can prepare trading account, then here where the entire ITC trading account there, because purchase and sale was only matched, but here even the indirect expenses, you are eligible to take the credit. So you have taken the credit, but for that you have to prove that the transaction is reported in your books, and for that you should give me the trial balance. Okay, thereby I can see whether the expenditure is booked, whether the income is booked. Okay, and it should be in line with the audited financials. So in case, for example, Shaikh Abdul Samad A, if he has 4 registration, as we discussed earlier, then I have to maintain 4 books of accounts, 4 trial balances, GSTIN, which will be in line with my audited values, audited figures. Okay. Then only my 9C, my 9 has a meaning. Okay. Otherwise, it's no waste. Okay. It does not serve any purpose. So GSTN-wise trial balance, which I will be, if I have a GSTN-wise trial balance, it will not take much time to prepare a trading account, profit and loss account, and fixed asset schedule for the GST for a particular GSTIN. And that I'm supposed to compare with my registers, outward register, export register, advanced register, everything. Okay. Table number 5, first part, 5A, I am supposed to take the credit side of the P&L account, GSTIN P&L account, entire credit. My income from operation, income from non-operation, operating income, non-operating income, other income, everything from the credit side, I am supposed to consolidate and report it in 5A. Everything, even income received from income tax department, that interest received from income tax department to be reported here. That also has to be reported. Exchange gain or loss has also to be reported here. Discount received also to be reported here. Okay, every income, dividend received also to be reported here. Everything to be reported here in 5A. Credit side, everything to be reported here. And then we will start doing the adjustments. 5B, unbilled revenue at the beginning of the financial year. The action is to add. 5H, if you go to 5H, it says unbilled revenue at the end of the financial year. Action is to subtract. I have a small example here. Assume I have given the property, my commercial property, on rent. I am a corporate body. I have given the commercial property on rent to Mr. Salman Khan, and the rent is 30,000 per annum. Since I'm a corporate body, I'm supposed to maintain my books of accounts on accrual basis. So the rent is accrued. The rent accrues on, the rent as per the agreement, I will be billing Salman Khan only on 10th of next month. Okay. So in the month of March, 10th March, I have billed him for the month of Feb. So 10th March, I have billed for 45. Yeah. I have billed for the previous month, March month, and on 30th of March, when I'm going to close my books, I have to take into consideration the 20 days, the interest, the rent for the 20 days. That is 30,000 rupees divided by 30 days multiplied by 20, which I will get 20,000. So I have created a income for that year for 20,000. That 20,000 on 1st of April 2023, I had done a reversal. Okay, I've passed an entry, I've done the reversal. On 10th of April, I have passed one income to Salman Khan. I've issued an invoice. It is accounted in my books. So in total, if you see, my income is going to give my P&L will, in the month of in the month of April, for the month of April, my rent income is only 10,000 rupees. But in my GSTR1, it is 30,000 rupees. So there is a difference of 20,000 rupees. And that is why they say that add the opening balance of unbilled revenue. Similarly, when you go to the end March month, I have done the same exercise. So in total, if you see in the books, as per the books, the rent income is 3,71,000. Okay. So in table number 5, capital A, I'm going to report 3,71,000. But in my outward register, in my GSTR1, in my GSTR9, I have reported the income of 3,69,000 only. So if I don't prepare this reconciliation, then the officer will definitely come out and say that, look, you have short paid the tax. It's only in thousands now. But what if there is in crores and lakhs? Okay. So I have to prepare this reconciliation to categorically demonstrate that the difference is only because of the unbilled transaction, unbilled revenue. So 3,71,000 is my income as per the books. Opening balance I have to add. I will add 20,000. Now it has become 3,91,000. The closing balance of unbilled revenue, which is 22,000, I have to subtract. Now I'm going to subtract 3,91,000 minus 3,22,000. The answer is 3,69,000, which is in line with my value which I have reported in GSTR-9. Okay, so this is the adjustment. This is the reporting which we are expected to do in my GSTR-9C. Now come to clause number C and clause number H. Unadjusted advances at the end of the financial year, the action is to add, and unadjusted advances at the beginning of the financial year, the action is to subtract. So if you add the closing balance has to be added. The closing balance I'm adding 28,000. I'm added, no issue. But if I subtract 45,000, what I will get? I'll get again negative. So I'm not supposed to subtract the opening balance. I have to go with the language which is there in the table. The language is unadjusted advance at the beginning of the financial year. So which means from the opening balance, they want me to reduce the adjustments. So during the year, it is the same example which we have taken previously. So 45,000, though it is the opening balance, but it is not unadjusted opening balance. So the unadjusted opening balance is 45,000 subtract with 32,000, which I will get as 13,000. Okay, so 28,000 I will add, subtract with 13,000, I'll get 15,000, which I have reported in my GSTR-9. I have reported in GSTR-9 as 15,000. Okay, if you remember in table number 4, we reported only 15,000 rupees. Here I'm reporting 28. I'm subtracting 13, which I get 15. Okay, so in both the cases, the answer is 15. So that has to be reported here. Deemed supply under Schedule 1 transaction, because as per Schedule 1, though there is no consideration, you are obligated to issue a tax invoice, pay the tax. Okay, so it is there in my outward register, but it is not there in my books of accounts. I don't report my stock transfer. Okay, stock transfer in one TB, it will be purchase. In other TB, it will be the sale. Okay, so it will get knocked off. So the stock transfer has to be reported separately. Credit note issued at the end of the financial year, but reflecting in the annual return. So if it is reflecting in the annual return, definitely it will be reflecting in my books of accounts. It's a hypothetical situation. So clause number E, let us keep the odd man out. Clause F, trade discount accounted for in the annual financial statement, but not permissible under GST. Come down to clause number J, credit note accounted for in the audited financial statement, but not permissible under GST. In both the cases, if you see section 15 and section 34, you are supposed to issue the credit note. So why there is a separate entries? Why there is a separate entries here? The separate entries is to ensure that the chartered accountant who was preparing this gives the importance to both the sections separately. Independent attention was mandated. So hence they wanted to give this independent entries in the GSTR-9C, table number 5. So for trade discount, they wanted the chartered accountant to see whether the section 15 has been complied in full or not. And in case of clause number J, they wanted to see the compliance of section 34. Clause K, adjustment on account of supply of goods by an SEZ unit to DTA unit. If it is an SEZ unit, the supply made by SEZ unit to DTA unit is treated as importation, and the DTA unit will be filing a bill of entry. So when they are filing bill of entry, they are eligible to claim the credit. SEZ unit has not done any supply. Okay, so they have not done anything. It is only the DTA which is acted as a importer, filed a bill of entry, and hence they only have to report. SEZ unit need not report. So this transaction has to be removed. Turnover for the period under composition scheme. So the maximum composition limit has to be taken care while preparing this. Okay, so the entire 9C, for all the units has to be filed in tandem to ensure that the turnover which they are reporting is within the limit of the prescribed in the GST law under section 10. Adjustment due to foreign exchange fluctuation, that's why I told you have to add at the beginning, then you can remove from here to as a proof that you have complied with the with the instruction which is given in GSTR 9C. Adjustment in turnover under section 15 and rule thereunder. So we have many times seen that the expense are netted off with the income. So in those cases, wherever there is an expense which is netted off with the income, we are supposed to report those transactions here, which we can explain in the future whenever the officer visits the premises. Adjustment in the turnover due reason not listed above. So anything which is connected to no supply, especially no supply, I can report here. Like dividend is one which I don't want to take it to the next table. I can report here. Sole proprietors rent income, which is not forming part of the PNL, it is forming part of the capital account, that can be reported here as an income, which is where he can say that yes, the income has come in the particular PAN and he has discharged his GST liability, that he can report here. Okay. Table number 7, the gross turnover, the gross taxable turnover will come in 7A. 7B, I have to exclude the exempted, nil rated, non-GST and no supply. I can take the benefit of table number 5 and prepare this table, provided if I am not filed a GSTR-9, then all precautions which I told for preparing table number 5 has to be taken at this stage while preparing table number 7. So 7E will give me the taxable turnover. That taxable turnover, I have to break into the tax rates to establish that I have done a proper classification. Okay, so now we have given the HSN code. I'm going to give the rates. So the officer will be in added advantage to check whether the classification has been done properly or not. Okay, so rate wise, I have to give. RC means reverse charge. So we saw if the transaction of a particular year, the reverse charge is discharged in the next year, then you are not supposed to report in the next year. You are supposed to report in the current year the transaction, though the tax has been paid in the next year. So I have to report here. There will be difference, and that difference I have to tell that the tax I have paid in the next year. Okay. Clause table number 11. If anything which is due to the differences in table 6, 8, and 10, I get any difference, there is a reason. In table number 5, table number 7, and table number 9, there is a liability which I want to discharge now. I have to report that transaction in table number 11. Table number 12, it's a beautiful table. I really love this table. Table 12 is a matrix. Table 12 is a matrix. With the help of the matrix, you can demonstrate whether the ITC which is claimed by the registered person, whether it is accounted in the books or not. Table 12A, 12B, 12C, it's like this. 12A is the current year transaction. 12B is the opening balance. 12C is the closing balance. So 12A plus 12B minus 12C, I should get the value which the credit I have claimed. If the value is less, then that means I've claimed more credit, which is not there in the books. I am not eligible to claim that credit. So in bottom, the thumb rule is I will compare the ECL of the year-end ECL. That means after filing my March month return, the ECL balance, I will compare with the closing balance of my books, ITC closing balance of my books. If it is more, then I have to check whether the ITC is reversed in the next financial year. If it is reversed in the next financial year, whether it is reported in entry number 13, 12 or 13 of GSTR-9. If ITC is not reversed, then I will make them reversed with the DRC-03. If ECL and closing balance of the books is same, that means it's a regular instruction. I need not do anything. It's proper. It's everything is perfect. If the ECL balance is lesser than the closing balance, that means there is a huge amount of credit available in the books which they have not claimed. So I have to check whether the ITC has been claimed in the next financial year. If the ITC is claimed in the next financial year, then I will check whether it has been reported in entry number 12 or 13 of GSTR-9. If it is not claimed at all, then I have to suggest the registered person to do a reversal of that ITC and bring the ECL balance in the books, so that the books ITC and the ECL ITC is one and the same. It should not be more, it should not be less, it should be the same. Okay, so this brings to the table number 14. Table number 14 is again optional. We need not report anything because it has come in our 3CD. It has come in 3CD in different form. Okay, table 16, if there is a payable, which I found that though the ECL and the closing balance is matching, but there are certain ineligible ITC which the person has claimed, I can report those ineligible ITC in table number 16 and make them pay in table number 5. Both are ITC reversal and the outward tax reversal, which they had offered to pay through DRC 03, has to be reported in table number 5, part 5, final table. And then there is a verification. I hereby solemnly affirm and declare the information given above is true and correct. Again, here it is true and correct. And the chartered accountant signature is not required. The registered person has to sign by himself. Thank you very much. Thank you for the patient hearing. And Hitesh, over to you.
Sir, thank you very much for the elaborate and detailed core. I think you explained in very neat way and class by class. I think you spent very good amount of time on 9, which is really important. So
Yes,
thank
sir.
you very much, sir, for the elaborate explanation.
Thank you, sir. Thank you very much.
Please handle the question answer session, Hitesh.
Hitesh.
Yes, sir. Yes, sir. 1 minute.
Hitesh, if you don't mind, shall I leave because I have another meeting by 5?
Sir, there are only 2 questions.
Oh, 2 questions, sir. Then I'll take. Yeah.
Yes, sir.
Hitesh,
Turnover of financial year 22-23 is declared in September 23 GSTR 1. The same sales are reflected in GSTR 9 of 23-24. How to rectify this?
No, the turnover
Of 22-23 is declared in 23 September.
Okay. The same sale is reflecting in GSTR 9. So what has happened is, if it is appearing in GSTR 9, that means the date which they have reported is wrong. If they have reported the transaction of 2023, then only it is possible. Okay, if they have reported the date of the previous financial year, it will not come at all.
Correct.
So the wrong date has been given in GSTR 1 actually.
Exactly. So now what I suggest is you can exclude that transaction. You can exclude the transaction and you can say that it is for the old year. Look, human, everything is human. So there can be a human error. And since you have made the tax payment, there is not going to be an issue. But you have to report the correct transaction here.
Right.
I'm joining.
Second one. What about the ITC reversed through DRC 03 but reclaimed based on favorable order in GSTR 3B? They have claimed in 3B. Should this be reported in any other ITC claimed in table 6?
Yeah, in this case, since this is it is not a regular ITC, I will suggest this can be claimed through any other ITC.
Because it was reversed through DRC 03.
Through DRC 03, it was reversed through DRC 03, and they have an order for reclaim. Since there is an order and it is not a regular case, they have to report separately. If they report in table number 6B, then it will be challenged. They will definitely ask you to show where it is appearing in GSTR 2B.
Correct.
So it will be challenged.
Okay. Sir, one more is there. Inspection done and suppressed turnover found. Paid taxes also. So where to declare?
It has to be declared as B2C transaction.
Okay.
One more is there.
Last one, sir. Sorry, we are taking your few minutes of yours because you again have a session. We understand. Just one last question. In GSTR-1, we have reported correct taxable value, but in 3B, we have declared less taxable value. But
Okay.
tax is paid correctly. Where to report such transaction?
No, the correct transaction can be reported in GSTR-9 since the tax is paid properly. It's not going to hamper anything.
Only taxable value they have to correct in
Yeah,
GSTR-9.
they can do that. They can do that.
Right, sir.
Yes, sir.
Okay.
Thank you, sir. Thank you very much. Thank you, Hitesh. Thank you to the committee meeting. I am a bit in hurry, so could not even thank you all. So I'll just take leave because I have to attend another meeting. Thank you
Sir,
very much.
thank you very much, Samad sir. On behalf of Tax Bar, I convey my thank you very much for your valuable time.
Yes, sir.
Sir, will you give any email for the participants to?
Yeah, my mail ID is samad, SAMAD @ssaca.in.
It is there in PPT, sir, last page.
Yeah, it is there in PPT.
You
I'll
can
share the
circulate
PPT.
the PPT, sir. So
I will
that will
definitely do
be
that. I will definitely do that. Yeah.
helping us.
Yeah.
Please,
If
please
any
post
other
the-
queries are there, they can send us on mail. We'll get it replied back from the speaker.
Yeah.
Yeah,
Thank you.
That is a great help, sir. That is a great help.
Yeah. Thank you, sir. Thank you. Thank you very much.
Thank you.
Thank you.
Thank you very much.
Thank you, dear participants, for your patience hearing. Please mail. Hitesh, do you have PPT with you?
No, not yet, sir. We will take it from the speaker.
Okay, we'll circulate in the group. We'll send in the mail. So to the mail ID, you can post your queries
Right.
for elaborate answers. Thank you
And
very
if
much.
anybody wants to see again go through this particular session, they can check it on the YouTube channel of our tax bar. It is live and it will be saved in the page itself. So again, it will be helpful to everybody.
Ramdev ji is there?
I don't think so, sir. Let me check.
No.
No, sir, he is not there, sir.
Okay. You can post any questions. Hitesh is here. He can help you. Chalo, we'll end up.
We'll wrap it up, sir.
Yeah. Thank you very much. Thank you. Somebody has raised the hand.
We have replied to him, sir. We have replied to him. He has raised a question actually.
Okay.
Regarding the inspection one, we have raised, confirmed it.
Okay, thank you very much.
Thank you very much. Thank you very
Right,
much.
Thank you all the participants.
Thank you all. Thank you all.